Good morning. You're watching a home broadcast of Business World Live. I'm Danny Laurel. It is with a heavy heart that I begin this broadcast today with a tribute to Jun Talaykay of Philstocks, who is one of our closest friends in the show. He has been an honored guest, and he has also been a very esteemed member of the finance and business community. Jun, this broadcast is for you. Let's kick off with our top story. Economic managers are expecting a recovery in 2021, but first they're seeing a deeper plunge for the GDP this 2020. The Development Budget Coordination Committee, or the DBCC, sees GDP to post a growth between 7.1% and 8.1% in 2021. The DBCC says a timely implementation of recovery program that binds the public and private sectors in mitigating the impact of the pandemic will be the key for the economy to recuperate next year. NEDA Acting Chief Carl Kendrick Chu is optimistic that growth will come in the last two quarters of 2020 to mark a gradual recovery from the contraction of 0.2% in the first quarter and an expected deeper fall in the second quarter. The DBCC sees GDP to shrink by 2.4% to 3.4% this year. That's a deeper contraction than the negative 1% growth forecast, which was made in March. Yuben Paracueles, an economist at Nomura Holdings in Singapore, says that the forecast range may still be subject to downside risks, given the need to be very cautious in reopening the economy amid the pandemic. He says what is needed right now is a large-scale fiscal easing. Separately, Capital Economics says the Philippines is expected to be the hardest hit in emerging Asia in the second quarter. That's as the government extended the lockdown in Metro Manila until the end of May. Capital Economics says GDP may shrink 17% in the second quarter. For the whole year, it forecasts a contraction of 6%. Oxford Economics also sees the Philippines to lag behind its peers. The think tank noted that while the Philippines' lockdown was considered the most stringent in the region, it is among the countries where containment measures appears not to be decisive and where mobility remains lower. Checking in on how our markets are opening, let me just pull up my Bloomberg terminal here for you and see whether actually we have extended those losses from yesterday. You can see that that is in fact the case. We are now back to 5,500 levels here, trading at 5578.71. That is down by 0.8%. This morning, this of course amid us having even more gloomier outlooks in terms of the GDP. There were the economic managers that had revised that outlook yesterday, and amid that, we also saw the index falling by 0.5% yesterday. Now, even so, at these levels, we're still above 20% gains from what we saw as a low in March 19. However, April Litan of COL Financial said in a Business World Insights forum yesterday that the stock market's rise of more than 20% in the past few weeks is just due to the external events that are happening here, such as the reopening of the economies in other countries, as well as the aggressive stimulus, fiscal and monetary that countries have been doing. But she does say that the worst is yet to be seen and this rally will not be sustained. Another thing to be noting here is Ramon Monzon, he's of course the president of the bourse, saying that he now expects between 2 and 3 IPOs this year, and that we would actually be lucky if we see these types of activity, given that the original target was actually 6 IPOs. But still, you've actually got one listing, that is Mary Mart Consumer Corp by Injapsia. So far, that application is still ongoing. That's a 1.6 billion application for an IPO. And Monzon says that Mary Mart is now in the process of book building and is still targeting to list amid the pandemic on June 15. So that will be one to be watching out for. I just want to take a quick peek at how the overnight performance in the US has also led to languishing in the Asian markets. You can see my terminal here, how the US saw a bit of a, not necessarily a bit of a slide, actually a pretty big retreat. This is amid Fed Chair Jerome Powell warning about economic risks. So even more heightened risks there. You can see the Dow Jones down by 2.2%, S&P and NASDAQ as well with big losses. And as I mentioned, Asia Pacific feeling that pain, which has been now, flowing into our region as well. Japan and the Nikkei, the Topix and the Nikkei 225 both seeing losses by more than 0.7%. So all across the board here, any market that is open in Asia is actually in the red. So we are definitely not alone. Now, some things to break here. Even more pain in terms of first quarter income. This time it's Ayala Corporation, the conglomerate. They reported a drop in net income for the first quarter yesterday, and actually the shares declined on the back of that announcement. You can see that on your screens here. Revenues down 11% in the first quarter to 61.72 billion pesos. Net income down 17%. And you can see the breakdown of where this pain has been coming from for the Conglo. We had reported already Ayala Land seeing a slump by 41% to their net income. BPI as well. They had mentioned that, for Ayala Land, for example, the property development revenues were lower by 38% because they couldn't do some projects because of the Taal volcano eruption. So even ahead of this pandemic, they had already been feeling the pinch. Leasing revenues from shopping centers down 9%, hotels down 17% because of this enhanced community quarantine. BPI as well suffering a touch there. They say this because of more loan provisions, expecting an increase in non-performing loans. Globe, we had reported that as well as slipping by 2% in the beginning of the year here. And AC Industrials now seeing a net loss on the back of a global slowdown. That's on the back of IMI shutting down facilities in China. AC Motors as well posting a net loss of 204 million pesos. But you can see actually one bright spot there is the energy unit of Ayala Corporation. And we can actually see that here if you take a look at my terminal right now and how the stocks of Ayala has performed. You're going to be seeing Ayala Corporation, the parent company, is still continuing its decline. It's down by 2.5% after already having been sold off yesterday. And you can see all the other units, Ayala Land as well, Manila Water and BPI all in the red, save for the energy component, which is actually up by 0.9%. And finally, just a quick peek at our airlines here, because just a very quick announcement that they have extended the cancellation of flights. This is, of course, our carriers, PAL, Cebu Pacific, Sebgo, AirAsia, until May 31. So more on markets later on in the broadcast with China Bank Securities' Rustine Mercado. Checking in on headlines is Thursday. Electronics exporters are appealing the government's decision to continue strict lockdown measures in Laguna, saying that could lead to $20 million in losses for the sector every month. The Semiconductor and Electronics Industry in the Philippines Foundation, or SAPI, is now requesting that restrictions in Laguna be downgraded to a general community quarantine. The province of Laguna, along with Metro Manila and Cebu City, will be under a modified enhanced community quarantine that's until the end of the month. Under this lockdown category, select manufacturing and processing plants, including electrical equipment and machineries, will be allowed to operate, but only on a 50% workforce capacity. Now, in areas under the GCQ, a longer list of business may be allowed to operate with up to 75% of their workforce on site. SAPI said the electronics industry in Laguna generated export revenues of 17.5 billion pesos last year. Around 40 manufacturing firms and 100 suppliers are also based there. The group also argued that its multinational companies in Laguna are part of a global supply chain producing components for pandemic response technology for hospitals, among others. Electronic exports in the first quarter of the year dropped 4% to $9.3 billion. That's a whopping 60% of total commodity exports. Meanwhile, also unspared from the impact of the COVID-19 pandemic is the BPO sector, despite exceeding targets by posting a 7% growth in revenues to $26 billion in 2019. BPO firms agree that the pandemic will hit the 2020 headcount and revenue. The IT Business Process Association of the Philippines, or IBPAP, said companies are already increasing its work-from-home capacity to try and cushion the impact of the health crisis. The Energy Department says oil import tariffs could generate about 7 billion pesos this year, which could be poured to COVID-19 response efforts. Malacanang issued an executive order earlier this month imposing a 10% hike in taxes that's on imported crude oil and refined petroleum products. According to the DOE, the projection covers oil import revenue between May and December. The added duties are expected to raise gasoline prices this month. The Bureau of Customs earlier said increased import duty rate might generate substantial revenue that's despite weak demand for petroleum. This week, most oil companies raised their fuel prices. It's amid the lockdown. The price uptick follows the OPEC's decision to cut oil output by 9.7 million barrels per day until the end of June. The Agriculture Department is seeking 66 billion pesos worth of funding from the Congress to ensure food security, improve logistics, and provide emergency employment amid this pandemic. A portion of this will go to the updated Ahon Lahat, Pagkain Sapat, or ALPAS COVID-19 program, otherwise known as the Plant program, which is a food security initiative. Under the DA's proposal to the House Committee on Agriculture and Food on Wednesday, 31 billion pesos of the 66 billion peso funding will go to the Plant program, 20 billion pesos to improve the logistics and food markets, and 15 billion pesos for a cash for work program. Agriculture Chief William Dar notes that the IATF has recently approved 8.5 billion pesos for the rice resiliency project that's under the Plant program, which will be implemented during this wet season. Dar explains that they are now seeking additional funding to continue rice resiliency for dry season planting that's in October and November. DA's Rice Resiliency Project aims to boost palay production to 22 million metric tons by the end of 2020, which is equivalent to 13.5 million metric tons of rice after milling. Dar assured the panel that the country currently has a sufficient supply of rice. The health issue appears to be slowly but surely improving, so to speak, but this also comes at the expense of our economic growth as lockdowns and enhanced community quarantine are currently extended. How much cushion do our corporates still have? Here to share with us his insights, we have Ristine Mercado from China Bank Securities. Good morning, Ristine, and welcome to the broadcast.
Morning, Danny.
Ristine, just on a broad basis first, let's kick off with broad markets, because if we take a look at the short term, it's been very volatile on the back of any announcement that comes out. There's a sell-off, any good news, there's a buy-in. But if we take a look back, actually, and I'll pull it a year-to-date chart here, and you can see that on my terminal, from the March 19 lows, we are still up by close to 20%, or even more than 20%, depending on the day.
Yeah.
Is this not, enough to say that we are actually on a recovery path? And is this not correlated with the flattening of the pandemic curve in any way?
Well, if you look at it historically, like the past crises in 1998 and then in 2007, 2008, almost all surges that came right after making the trough led to a retest of sport. I guess really once we sold off to the trough around mid-March, people were kind of looking at what's going to happen next or signs of things getting better. So we have seen that, but then the uncertainty that comes after, you see a second wave of infections in other countries that have previously started lifting the restrictions come in, and at the same time, the government or other lenders kind of looking at reassessing the economic impact of our lockdowns and as well as the outlook moving forward. So you kind of see that being continuously assessed, so which may lead to some weakness or at least consolidation or pullback from the highs at 5,900 over the short term.
Christine, was the announcement, yes, that yesterday, even 2 days ago, that instead of a GCQ, Metro Manila would be in a modified ECQ? Did that have any change at all? Hasn't it already been digested by investors that this is going to be a slow process, a transition period? It's not as if, tomorrow all the businesses can open naman. So what did this in
Mhm.
any move the markets?
Well, I think that leading up to the announcement early this week, the markets were already pricing in like an scaling back of some of the restrictions, so opening up the economy bit by bit. But then again, the question now is shifting towards how much longer is the winding down of all these restrictions going to take place. So we were kind of seeing from an ECQ we would be moving into a GCQ, but then we're now in a modified ECQ. So I guess also important the important thing there is to kind of communicate what industries would be open, at what capacity. So again, we want to see that clear direction as to so we could further assess. I mean, how long or what the effects are of these prolonged restrictions are going to be. Because I think that's the biggest downside risk to economic growth for this year, right? So as long as those continue to be in place, then I guess again the assessment remains fluid.
What is the GDP figure now being priced in? Because there some from flat growth. There was even some expectation of some growth for some
Mhm,
economies this year, and then the first quarter figures came in, and that just came, considers 2 weeks of a lockdown.
mhm.
What are you pricing in terms of GDP? Because it's such a broad range right now, but is a contraction already clearly evident, and have markets already priced that in when we talk about the index levels at least?
Well, in terms of GDP expectations, it was kind of a little bit relieving that markets really didn't react too sorely last week when it was reported. And then even if the government kind of gave the expectations of further weakness in the second quarter, but then again, I think the main concern now is what if we see a resurgence in cases, which has been the case for other countries. So again, that uncertainty is pretty much enough to spur market caution and spur a risk off sentiment, which will likely lead to possible pullback or consolidation in markets. So again, it's really the uncertainty moving forward that will move markets as they try to continue to reassess the impacts of this pandemic.
Okay, so it's not something that we can actually say has been priced in
Yeah.
of this uncertainty. But nevertheless, a lot are looking at consumer stocks in this period. We actually had the MSCI rebalancing it, and we saw na naman pure gold rising
Mhm.
and replacing Security Bank. Actually, is this rebalancing on the back of? Do you feel that this rebalancing was because MSCI sees pure gold or the consumer play as a resilient sector, as a defensive sector? Was there any relation to that when they thought of the rebalancing? Apart from that, you've also got All Home, DMCI now being added to the small caps.
Well, in terms of what these index aggregators look at, obviously there are a lot of different things that they use. So I guess one is market volume or trading volume, and obviously that usually trading volume comes when there are issues that have good business prospects. So I guess in the case of pure gold, we did see. strength in pure gold, even coming from the March lows. Actually, year to date, it's actually on a gain, right? So the problem is we see all of these leaders, the ones that pulled through again ahead of the pack over the past month in terms of rallying, kind of slowing down, pulling back, and then being a little bit more cautious. So I think that since pure gold is nearly fully valued based on consensus expectations, we might see this MSCI rebalancing in its favor as actually a catalyst for a possible broad profit taking. So again, this comes in line with our expectations that the index as a whole will pull back at the in the short term.
Can you give us more information on your thoughts on pure gold and just other consumer stocks? Whether this rally is during the lockdown, a temporary spike in people buying groceries, or in URC's case, noodles and things like that, or
Mhm.
is it sustainable, change in their business model, or people actually buying more of these staples at the expense of other things, or is it just that compared to the other stocks, they're the only bright spot right now? Is there really a case for growth?
Well, it's a mix. So on one end, this whole pandemic is expected to kind of affect capex spending again across all of the corporates. So then again,
Okay.
if you look at these consumer stocks, uh, especially for in case of retailers of essential goods, they are in a much better position because at least given even over under ECQ, they continue to do business as opposed to other sectors or other companies that have really scaled back their operations. So I guess really you have fund flow, you have liquidity in the market that's looking for something to buy into. So I guess that's why there is some strength that we saw in these companies over the past few weeks. But then again, at some point, we're all going to reassess and see, okay, is this growth sustainable moving forward? Is it just because there's a surge? Obviously, we saw that because there was some buying in the lead up to the ECQ. But then again, uh, ultimately over the next few years it's going to be expansion plans that's going to drive top line growth. So on one end it's good because if you're an essential retailer, you will see consumers buying or going into your businesses. But then again, on one end, will businesses be comfortable ramping up capex, especially since, again, we mentioned that the assessment around the pandemic remains fluid. We don't know how much longer the restrictions are going to last, or how much longer is it going to take for us to be able to fully effectively mitigate the virus effects.
Christine, let's focus on JGS, which has also just released their earnings. First quarter net income 1.9 billion pesos, down 71% year on year. Is this a surprise, or is this something already expected? Cebu Pacific has been closed, but again, this is first quarter pala, so
Mhm.
it's. And how does this color your rest of the year outlook, especially since they have URC as a big chunk, of the portfolio, but also Cebu Pacific dragging this down?
Well, I guess we have been kind of expecting all of these weaknesses across all corporates, especially those with businesses in very vulnerable sectors. So again, in terms of JGS, it's really been said that will be a little bit challenged this year. So again, moving forward, what is the assessment going to be like? So in terms of, even if we scale back the restrictions in travel, is it really going to be a reversion to a normal before, where everybody was inclined to book flights and travel? Obviously, that's not going to be the case. So it's really mapping out what the new normal is going to be like, and then hopefully how much longer it's going to take for that new normal to kind of ease into what we saw even just 4 or 5 months back. So that uncertainty obviously is what's going to drive prices even lower if those can't be suitably ascertained by the market.
Okay, another one. I'm sorry that I have to break all of these earnings that are going down, but I just wanted to parse through the AC earnings. So
Mhm.
again, I already reported Ayala Land before. They had already reported BPI. They had given guidance on IMI, etc. How are they
Yeah.
going to pivot in this period? They have said that they're going to be, redirecting a lot of their capex. Stopping projects in the property space, at least, that have not started yet, but pivoting towards digital for the banking, pivoting towards hospitals, consolidating industrials and logistics into their energy arm. What's your outlook on the Konglo on AC?
Well, we kind of expected already the weakness because obviously the Ayala Land weakness was already communicated early on. But then again, if the pivot is towards making the business more digital, more resilient, so obviously long-term gains, those are going to be long-term gains down the line. So in deference to short-term, challenges in terms of capex spending or possible delays of product launches, obviously those are going to be affecting their earnings outlook, at least for the short to medium term. But then again, if you look at it, consumer spending, how is it going to be? If the drag was residential sales, then how is uptake going to be like? So, for example, OFWs account for a sizable portion of the real estate market because they pick up uh, condos, residences, all of those residential projects. So if you see that declining, obviously the priorities of OFWs will shift from big ticket purchases to more essential goods at this point in time, right? So again, it's how your consumer is going to be, or how their consumption is going to be like in the coming months. It's really going to drive all of these business strategies moving forward.
AC is so diversified, already, and they're in
Mm.
every aspect. Is it still not a good stock to be investing in right now, given that they've spread the risks compared to individual stocks, for example?
Well, it depends on what your time horizon is, right? So if you look at much longer time horizons, if you saw what was happening in 2008, that sell off around 50% drawdown across the market eventually led into rallies that returned three times the initial index value. So if again the market and the global economy has shown their great resiliency and great potential for growth over the long term after weakness or after crises like this. But again, if we're looking at something more short term, obviously we're going to see some weakness. But then again, it's the improvement that the markets are going to be looking towards. So as long as prospects continue to be brighter, and as long as you future proof your businesses, then I guess it would be something that will contribute to the longer scale uptick in prices.
Christine, can you give, since we're on the topic of anyway Ayala Land, let's
Mm.
shift to Mega World because it's another one that has forecasted a 30 to 50% drop in 2020 earnings. And the big issue for me is, there's so much into office space, and
Mhm.
was supposed to be, according to some analysts, the bright spot in this pandemic, na parang the BPOs are supposed to rise. We actually had David Lee Chu on the show yesterday saying that that's what's going to absorb all of these vacancies. The BPOs will benefit from crisis in offshore markets. Why the cut, and especially if it's related na naman to the office space, and what does this tell you about the BPO sector in general?
Well, obviously, in terms of MegaWorld, you have the retail leasing business as well. So if you see some weakness there, again, the community quarantine kind of provides still restrictions on tenants that can operate. So there's that. But then in terms of office space leasing as well, uh, it, I think BPOs, for example, or locators might look at their potential expansion plans and see how they're going to react over the next few months in terms of those plans. So will they be pushing through? Will they not? So again, that uncertainty might lead to higher vacancy rates. So if you get higher vacancy rates and you have some units coming online through the year, then at what cost will these locators kind of absorb your office space? So again, a lot of things are unknown. So
Mm.
it really the you also have the supply demand dynamic. So unless there's a significant catalyst to kind of shore up the risk appetite of these businesses, then we might really see some weakness down the line.
Christine, before I let you go, last question on Merrimart, still pushing through with the IPO. What's the, consensus there? I mean, is this the right time to be pricing this stock, or do you actually see an excitement with investors maybe hungry? There's liquidity naman still in the markets.
Yeah.
There's like some cash. Is this the right time to be going and tapping into equity markets?
Well, again, as you mentioned, there is liquidity, so I think that there is some demand for a new issue in the market. And in terms of the space where Mary Mart's at, it's consumer retail. So again, one of the more resilient sectors in light of what's going on. So again, if we were to see listings or potential listings, that would be a bright spot to be in. So I guess really the next concern is going to be how is it going to be able to execute on its expansion plans. So the based on their prospectus, it was 3 stores in 2019, and then they're going to ramp up significantly over the next 2 years. So again, what's the effect going to be of the pandemic on those expansion plans? That's really going to kind of dictate what the value of the company is going to be, at least for the market. But then again, in terms of purely on fund flows and liquidity, I think there is some excitement. People are looking to buy something or shift out their profit taking and move into other issues.
Okay, so thank you so much for those insights. That was Christine Mercado of China Bank Securities saying there is money in the market, but they need to prove whether the expansion plans can still take place amid all of this uncertainty. Thank you so much for joining us this morning.
Thank you, Dan.
And that was a first look into the business day. Today is Thursday, May 14, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danny Laurel, and we are One News.